that's the market's just trying to break you. Yeah. Those are the worst. They were that's what happened. But 2 years ago, that was happening consistently to me, where it was either it was me and different George W. We had a handful of patterns, and it's like either we were just missing by 1 pip, or like it would do exactly this. It would hit target 1, stop us out for break even, and then run down and hit target 2 without us. And it was the most frustrating thing in the world, because you're looking at your trading and your results look pretty bad, right? Your results are like, loss. But when you look at it from a realistic standpoint, they were losers, but they were losers by like 1 or 2 pips. So it wasn't as bad as it seems. And that's, again, for confidence, that's another important thing just to pay attention to, instead of just paying attention to the final P&L, right? There's a big difference between you being on a 10 trade losing streak where you're just getting blown out the water, and you being on a 10 trade losing streak where you have a bunch of near misses, right? Would you guys agree, or would you value them as the same? Are all losing streaks created equally? No, right? I kind of look at it like, if you guys are American football fans, like the New York Giants, right? New York Giants play in a division called the NFC least. It's called the NFC least because every team in that division stinks, right? The team I support stinks. The team in first place stinks. Every team in that division is horrible, right? I think the winner of the division right now has like 3 wins and 7 losses. It's bad. And the New York Giants are one of those bad teams. But their record isn't as bad, or I guess their team isn't as bad as their record shows them to be, right? I think their record is like 3 wins and 7 losses, but many of those losses have been close. So it's one of those things where it's like, you're not as bad as it looks like. And losing streaks and even winning streaks, I guess, are the same thing. You could be on a losing streak that is very close, and you just, the market's just a streak of bad luck in the market. You traded during a news event, missed by 1 pip. And it's good to be aware of that, because psychologically, that's a little bit of a confidence boost. It means you're doing the right things. You're just a little bit off in that projection. Versus, I would take that versus a 10 trade losing streak where the market immediately goes in the opposite direction, right? Because what does that tell you if the market immediately goes in the opposite direction? Does that give you any confidence in your analysis? That would be more of a red flag for me, right? Like, man, like I was real, not just wrong, I was really wrong. No news event, no anything, just really wrong. And that's something where it's like, hey, I should probably go back and revisit this to make sure I'm not making any foundational mistakes. And you'll see me do that with trades as well. You got to get your confidence where you can in the market, because Lord knows the market's not trying to give you confidence. It's trying to ruin your confidence and have you do dumb stuff, right? My opinion on the market is that it wants to bait you into doing things you shouldn't do, right? You are a happily married man, and the market is this potential mistress that is coming up in the just trying to seduce you to do things you shouldn't do, and you have to try and avoid it, right? So you got to get your confidence boost where you can and not give into that. So if you look at trades, and if you watch me trade, I get excited when the market stalls at levels, right? If I have a predictive level, and let's say I'm entering a trade, and if the market just stalls there and shows me something like a higher high, higher close, or a pin bar, I take that as a confidence boost. Why? Because we predicted a level that the market proved to be important. Now, there's a difference between that and a follow through. You may not get the follow through, but that's a lot better, having a stall in the market thinking about it and then ultimately making the opposite decision. That's better than the market just blowing through your level. If the market just blows through your level, again, no news event aside, and every once in a while it's going to happen, but like on a consistent basis, right? The market's a spicy señorita. If the market just blows to your level on a consistent basis, it means there's a problem with your predictive analysis, right? It means you're not predicting the right way. And that's something that has to be fixed, because that's going to be a long-term issue versus streaks of bad luck and streaks of good luck. So take your confidence where you can from the market. Even if you're not trading, when you play the game of just looking at charts and making predictions, take confidence in that. Take confidence. Take your wins, right? Because they're hard to come by in trading.